Good morning, everyone, and welcome to Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me today, I've got Brian Caprice from Keep Trading Simple. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, and that any trading decisions you make are solely your responsibility and at your own. Share this disclaimer that trading involves. Well, sorry about that. Not be appropriate for everyone, and that any trading decisions you make are solely at your own risk and at your own risk. Had a little bit of an echo there. Also, this is an educational session. Please do not construe anything we say as a buy or sell recommendation. We are doing this for your education purposes. All right, let's stop sharing that. And we are having a little bit of a technical difficulty, as you can tell. I've got an echo coming in.
You got an echo. I can't upload a chart right now. I've got fuzziness everywhere. So yeah.
So we're gonna talk through this a bit, and then we'll sort through it. I know we want to talk about a couple of markets before we get into taking a look at maybe a little bit of the equities and something over in the commodities world. First, do you just want to kind of talk about what we had a jobless claims number this morning, and then you can also talk about what we've got coming tomorrow. So
yeah, I mean, news-wise, we got all kinds of stuff going on. Obviously, OPEC meeting. OPEC has delayed their meeting for an hour this morning, trying to come to a final conclusion. The last highlight that we heard, they mentioned that they were going to allow a small production increase. Greed is taking over for OPEC Plus. Everybody wants to produce some. As far as the Brexit front goes, there was an article posted earlier about it's nearly now or never for the UK-EU trade deal. They were talking about getting a ton of pizzas being brought in a couple hours ago, that they were working late to get a deal done. The pound has skyrocketed, 160 versus the dollar, 197 versus the yen. It's actually at a level that we'd mentioned earlier in the week. I can't show you the chart, unfortunately, but the level up at 140.11 to 140.46 was the extreme range of the curve. The last time we hit there was approximately about 142 pip drop on that one. And we're back at that same level, starting to print some red candles now on the 4-hour. The unemployment number from this morning, I guess the unemployment claims number was actually better than expected. It was forecast at 775 and came in at 712. So that's great news. Kind of conflicting with what we saw the ADP number yesterday, which leads us into tomorrow morning, which would be the non-farm numbers. For those of you that just need a reminder, first Friday of every month, we have the big news report of the non-farm employment change. It's still holding firm at a 500K forecast, and the unemployment rate is supposed to come down. Now we have less people being hired, but not as many people are filing first-time unemployment claims. So it could be pretty interesting. You can play that through a technical basis, or even, again, as you mentioned, Nadex has the event binaries up there as well. You could kind of jump over there and trade. So that's kind of what we have news-wise coming into today. And markets kind of reacted kind of crazy. We mentioned a couple things. Oil's been kind of crazy. Gold has just been going higher, higher, and higher. Again, more talks of stimulus coming, which, again, stimulus equals inflation, which equals gold going higher. And then, obviously, the indices are in an interesting place right now. Although with positive data, so far the market is not accepting that as anything good because, again, right now the biggest focus is going to be on probably vaccines and what recovery efforts look like versus an unemployment number, which, again, one of the biggest problems with the unemployment number right now is if you've already passed through your 26 weeks of unemployment, you can't file again. It just, you've exhausted your unemployment. So some of the unemployment numbers are a little bit off right now, which is causing issues. But the NQ is in a great spot right now.
Yeah, so we're actually going to cover a bit of that. Let's start with the Nasdaq, with the U.S. Tech 100, and then I'm going to jump over to those event contracts that you mentioned, just because I want to show them because you brought them up, and then I think the story of the day really is we'll probably jump over to gold, just because it's been Mr. Gold's wild ride. But yeah, let's talk about the Nasdaq here. We've got this up here right now, and I know that we're seeing some. We've got good news, but it's having a hard time punching through here. Yes.
Yeah, I mean, there'll obviously be some retail trader sentiment coming in as soon as the market opens. But again, that could also lead to a trap off the open as well.
So definitely something to be looking at. It is seeming to have a little bit of a difficult time getting through this 12,500 level. How could you play that? There are some we've got a knockout that's roughly in this range. I mean, you could take a look at the other contracts, but I think they're a little further away, depending upon how you wanted to play it. But if you didn't think it was going to get through this 12,500 level, limited risk, limited reward way for you to look at, if we're going to roll over here, there's a way to do that to the downside with the Nasdaq. I want to just take a quick look at our call spreads just while we're on it, just because I like to show you there's different ways to do this. I mean, you could do it with knockouts. Here's the daily. Let's bring up some daily call spreads. There are some call spreads in here that could get kind of interesting as well, depending upon how you wanted to play it. Let me just take a look. All right, so I mean, this is a daily call spread. If you thought this was going to roll over, there might be ways for you to play this to the downside with call spreads as well. And lastly, the binary options. So let's take a quick look over at the US Tech 100. I am going to just use the daily ones, and it's good to note that there are, with the way the Nasdaq has been moving, you can clearly see that there are a bunch of different binary option choices in here. So it could be moving through multiple binary option strikes that could be interesting, depending upon how we see the equity markets open this morning in about 23 minutes. You mentioned the event contracts.
Mm-hmm.
Let's go ahead and just take a quick peek and see where, if anything is shifted. I know we covered this earlier in the week. The 6.9% level is still the one that everyone's looking for. So the unemployment rate really hasn't changed, even though the jobless claims expired. And we've got the non-farm payrolls coming in tomorrow as well. And it looks like those have moved around a little bit, but there are some levels in there that you could play with if you think the economists aren't getting it quite right. Let's, and I like it. We're going to keep ourselves on time today.
Sorry. My bad.
Let's take a quick look at gold, and I'm going to bring it up over here. Let's bring up the daily. Actually, I'll bring up the weekly gold binaries to start. You can get a glimpse at what the chart looks like. Let's move this out of the way. I mean, we can see that gold has been a bit of a crazy ride. As the economy started to recover and we weren't quite sure on stimulus, we saw gold really get hammered. And now that they're talking stimulus again, it's rallied all the way back. And I know that this 1840 level was an important level that we had talked about earlier, and it's still now it's just hovering there.
And today's positive number doesn't necessarily bode well for gold, because if less people are unemployed, again, obviously there's less of a need for stimulus if more people are working. So again, that doesn't necessarily bode well. The number yesterday was great for gold. Today's number, not as great for gold.
So right there are some choices here in the binary options where you could play gold. These ones expire tomorrow. Let's take a look at the knockouts. I happen to like gold in the knockout. Oops, I clicked the wrong button. When I hit commodities, my mouse isn't cooperating with me either. And I want to also point out, I'm going to show something quickly. I mean, we've got, I'm going to draw a Fibonacci on here real quickly, and then I'm going to zoom in on it. And if you're not familiar with how to use these tools, we can certainly help you. But this is it's a 1, 2. I click someplace else. It's a 1, 2, 3 Fibonacci retracement. We're going to start up here in the upper left-hand corner. We're going to find our trend. There we go. Let's drag it.
Yeah, it should be approximately around the 61.8 is where the retracement should be kind of based off of. It should be close to there.
And that's exactly what we're seeing. It's right here. I mean, it's right around 1840, which is that 61.8% retracement. So what happens now? Now you always say don't trade with a crystal ball, but if it's going to be moving around and you see gold either start to rally or break, I mean, you might see it move away from this level, and there could be some opportunities. And there's some knockouts in here, and I know there's even call spreads that
Yeah,
could
I mean,
be.
and it's also a level that experts are talking about. I don't know how often I guess the viewers go across the daily FX. But daily FX right now actually has an article on the V-shaped recovery and then Fibonacci levels offering resistance in gold, which is what you just mentioned. The other thing that's kind of interesting to look at too is kind of an added perk to daily FX is they have an IG client sentiment. 82% of the sentiment right now, according to the client sentiment, is bullish on gold. So typically, when everybody is bullish on gold, everybody's trying to get long, it tends to be where you see those reversals sometimes. So it's not
So
necessarily
yeah,
the worst piece to be looking at, right?
so well, I mean, and that could get interesting, right? Right. If you want to be a contrarian, everyone's looking bullish as we have hit this V-shaped recovery. I mean, there's call spreads in there too, limited
Yeah,
risk, limited
yeah.
reward, and it could get. They could be interesting. You got to make a determination on how you think, what your opinion is on whether gold's going to continue to rally from here or roll over.
Mhm.
Um, with that, I love it. We're keeping it a little bit tighter today. Um, is there anything anyone should be looking out for the rest of today, going into tomorrow, that might be something you want
I
to
mean, there
mention?
is a bit of news. At 10 o'clock today, we have ISM Services PMI. It's expected to be a little bit lower than previous, but that could be worth a reversal. But that's about it. But besides that, the only kind of headlines we're looking for is OPEC, the OPEC Plus kind of response. So again, watch oil be a bit more volatile today. It wasn't lost on me that an hour, and not even an hour, 15 minutes after the inventory report, OPEC came out with a statement. So they obviously were not big fans of the inventory report. And then again, they're talking about allowing cuts. So keep your eyes out for that. And then again, the biggest thing is again 10 o'clock reversals, and then watch for non-farm payroll tomorrow morning.
Awesome. Well, thank you, Brian, for joining me this morning. We'll iron out our technical
Yeah,
issues
we can get
tomorrow
the
morning.
cars fixed by tomorrow, hopefully.
If you've got any questions, you can reach out to Nadex, customer service at nadex.com. Email us. Follow us on social media. If you need Brian, support at keeptradingsimple.com. We are accessible. I want to thank you for joining us this morning, and please join us tomorrow morning. We'll have our all the wrinkles ironed out, and good luck in the markets.